All right. Well, moving on to the second story. This is has to do with MicroStrategy, or sorry, strategy. Can't call it MicroStrategy anymore. The strategy. STRF or Strife shares. Is it a clever way to fuel their Bitcoin obsession or a warning sign? And could MSTR actions trigger the next Bitcoin bear market? Okay, fine. That's a sensationalistic lead in there. I said that for the MicroStrategy people out there, the strategy people out there. I said that for the AI. I said that for the algorithm. I don't know for sure if what they're doing is going to cause that problem. But Mike, I tried my best looking into the Stripe shares and Strike and the common shares,
Mhm.
trying to see it as anything other than a Ponzi scheme. I'm finding it very difficult. I don't like saying that because there's warriors out there, comment warriors out there, but they're issuing preferred stock now. So you have striking a STRF
Mhm.
in order to no longer or to limit the amount of dilution that they do on their common stock so that they can buy more Bitcoin. And why do they need to buy that Bitcoin? Because they need to pay the 8% and now 10% dividend on these preferred stock and keep the underlying, the MSTR, rising. So you need new money to pay for old money in a semi complex financial scheme. I just don't know how that's anything other than a Ponzi scheme.
So,
I just don't see it.
yeah, I mean, my immediate question is why would anyone buy a risky 8% debt instrument? Which by the way, I don't know how many people have ever even heard of a Strife prior to this. I haven't.
Oh,
Um,
they haven't even listed yet.
right.
It's going to be, yeah,
A perpetual Strife preferred stock sounds like the same kind of thing that would be presented in the 1980s when the mortgage industry came along and said, "Oh, we've got these convertible loan obligations that are available to you now, and we're effectively just tranching together all these mortgage together in one securitized product." Now, that has been successful for a lot of organizations that are looking to trade across, but this still feels like one of those custom types of instruments that seeks to serve a goal that only benefits the company and not the end investor. I'm failing to see the upside of using this type of instrument instead of just buying Bitcoin outright and owning spot. Like, can somebody help me
yeah.
understand this?
Well, the idea here is that if for some reason you're an institutional player or you're some corporation or whatever, and you cannot buy Bitcoin, that this becomes a better way of going about it. That basically he wants to be. There was an interview he did recently that of the 300 trillion that's inside fixed income, he wants MSTR. Oh, sorry, he wants MSTR to be 1% of that. So he's looking to just get he wants people to buy a Strife as a fixed income play. You're not, in fact, because it's not even convertible to the common stock. You're not even playing it as a proxy to MSTR. You're just buying it for the 10% or the 10% dividend. And the
Right.
idea here is that fine, because I was looking for the holes, looking for the benefits, looking for the disadvantages. They have enough Bitcoin in order to cover, they have like, what is it, $22 billion worth of Bitcoin now in order to cover all of the obligations for Strike and Strife. They can cover it all. And Bitcoin could fall 60% and they would still have enough in order to cover that. Fine. But I thought they were paying out the dividend or at least a large chunk of the dividend because of their core business, making $100 million a year or whatever. I thought they were using some of that to pay it off. No, they're not. They are paying it off by issuing you shares, you stock, in order to pay those dividends. So you look at that and you go, I just don't see how you look at that and go, this is a very safe investment. Now I get the 10% is there. Plus, you even have this extra of if they miss out on any dividends, they increase the dividend for that year by 1%, all the way up to a cap of 18%. And it's like you're at the top of the debt stack, so you're before bondholders, you're before Strike, you're before all the other obligations. So that that they could always sell the Bitcoin in order to get it. So they're trying to make this deal very, very, very sweet. There's even scenarios where if the stock plummets, the whole ecosystem, they call it the ecosystem, and the MicroStrategy ecosystem falls. Technically, your yield is higher because the stock price is lower,
Mhm.
but you have to trust that this Rube Goldberg, I'm not gonna call it Jenga Tower because maybe it's not that weak. This Rube Goldberg machine of buy more Bitcoin is working in your favor. You were just saying it before. Let's say the worst happens and Bitcoin falls to zero, right? Or it falls to $1 or whatever it is, some low number. Uh, MSTR can, in a sense, in some scenario, always decide they're going to keep their Bitcoin. They're not going to liquidate it at all. They're not paying it any dividends. They don't owe, they're not paying out anything, and everyone who bought into the ecosystem loses their money. Them and everyone who bought the leverage MSTR, ETFs and all that, everyone loses everything. They still end up ahead by having 500,000 Bitcoin, and you lose your money for what risk? Like, why were you doing that? Just go get a bond at 5% and don't worry about this 10% on the stock that just showed up in the middle of nowhere for a guy who's saying they're only doing that in order to use your money in order to buy more Bitcoin. This seems crazy to me.
I think so as well. I think this one's a little too confusing for me to really understand the benefit of the instrument. And so the first thing I think of doing is always taking to Reddit to understand what those smart guys over there are really thinking about the whole thing. I like this comment that I see right away. The deeper he digs with printing money, the more concerned I am for Bitcoin's future. Either a system which closely represents a pyramid will collapse, taking Bitcoin with it, or he'll become the largest holder and just prop it up and control the price. Neither sounds like good options for Bitcoin.
Yeah. So, right. So there's this question of does what they're doing, can it cause a bear market? Can it cause a massive sell-off in Bitcoin? Or what I actually think is more likely, that I don't think it actually could cause a massive sell-off in Bitcoin. I think you get something like in Volmageddon, with the VIX XIV, where the ecosystem blows up, and then you have some reflexive drop in the markets because it's correlated, and then also maybe Bitcoin takes a little bit of a dip. But even if they sold all 500,000 Bitcoin or whatever, they had 1,000,000 Bitcoin and they sold it all at once, that's the market could absorb that. So I don't think it could cause a bear market. What I think it can do is be like one of those things that we saw for Celsius, Luna, FTX, where it's another nail in the coffin in a bear market. So their average price for Bitcoin right now is like $41,000 per Bitcoin, and
Right.
essentially that's going to go up as they're buying more. Well, my low for the low that I have for my indicators for the cycle low right now is about 40,000. So let's say that keeps on going and we get to 250,000 Bitcoin and their average goes up to 50 or whatever. If we fall down to that low, I think in that last leg, now they have to do drastic things. They have to force sell a bunch of Bitcoin and whatever in order to get out of whatever mess that they're in. Just become one of these SBFs, one of these meme coins that just completely fails at the bottom of the market. So I don't think they could start that.
Well,
But there is an opportunity if you, and Saylor even talks about saying, like, people should do this if they don't believe in the ecosystem, and that's if Bitcoin falls. When Bitcoin falls, because MSTR is a leverage play on Bitcoin, it falls even more. I think we saw that in 2022. Bitcoin fell like, I don't know,
well,
50,
we just saw
60%.
it. We saw it just the end of last
Right.
year with a 47% pullback.
So then you can imagine that MSTR falls 80%. That's not like crazy. Falls 80%. That means Strike will fall even more than that. And if Strike, which is you have this, you can convert the you get 8% dividend, but you can convert it to every strike to 0.1 MSTR. That's only worthwhile as the price of as MSTR moves up. If it moves down too far, you actually wouldn't convert because you'd actually be losing money. So you can imagine sentiment just being brutal within the space where you get Bitcoin down, common stock down, strike down. It could be pretty brutal, and then they're selling Bitcoin in order to pay the dividend on Strife, if they're even paying that dividend. So you can just imagine this massive like FTX level like collapse that's happening. That to me seems like the case. And if you bet, I was looking at the options market. If you bet to short MSTR from, let's say, near the top of the market, you can do like around 2x, 2x on the low end, all the way up to like more, obviously, if the volatility is higher. So you can actually, when I see something like this, I go, hey. Now, if you can almost get a signal for the market top, because we can see a little bit of that as liquidity decides to fall, then those options become a great play. And then I'm like happy that Michael Saylor decided to do that, because then I was like, okay, I can't buy Bitcoin options, but I can buy MSTR options and
Sure.
short it to the downside.
So is that the play here? What's your trade?
Yeah. So my trade is at, I see zero reason to buy the common stock, zero reason to buy the new Strife. I for the 10%, I just don't see why you would take on the risk. I see that you go, great, keep on building out the complex. If I'm wrong, the people on the other side will make money off my options and all that. And if I'm right, I can make 2x or more. I love this tweet that I saw from Whale Panda, who said, I've said it before, that Saylor is going to bring the next Bitcoin bear market. I don't think it's the next Bitcoin bear market. This seems desperate. 10% dividend on 500 million translates to 50 million annually, payable solely in cash, and they don't have that cash, and they don't. So I'm open to being wrong. If you guys want to, in the comments, you have anything to say to Tom, you just don't know enough about MicroStrategy, I want to learn. Okay, I'm spending a bunch of time. I want to learn about it. Please give me something that tells me this is the best to do, better than buying the underlying, or anything else.
Sure. Otherwise, yeah,
AI,
I
anything else.
think you're right here. Puts at the cycle top for MicroStrategy seem pretty attractive.
Oh, and so if that's the case, the last thing I'll say is that then we'll get to see in the option space, we'll see what the skew as it starts to turn down. That might be a signal for a top. If the smart money in the MSTR, if you get this this put skew at the top, then that might be a signal at the top. So we'll see.
Okay. Interesting story. That guy is always doing something interesting. I'll tell you what.
I just have to say that just to prove to the commenters that I'm actually trying to pay attention. So I was like, okay, let me feed this into AI. AI knows everything, and I want to serve my AI lord. I want to see what it has to say about this whole situation.
Mhm.
So it's like, okay, what a historical situation is similar to this MSTR thing, and it brought up conglomerates in the 1960s and 70s, where
Okay.
companies like GE, I forget some of the other names, where they buy up things, they use financial tactics, manipulations in order to buy businesses that are not even directly related to what their core business is, in order to become a bigger entity. And the idea is that they're more flexible. They could, anyways. You can imagine what happens there, the GE type of model. And
Sure.
then I was like, well, the problem here is that those businesses that they're buying actually had products and services that in and of themselves are valuable. Even if the businesses aren't profitable, they're producing something that itself is of value. Whereas that's not what Bitcoin is. Bitcoin is a financial instrument. So I tell this to AI, and AI says, "You're right. This is actually far more like," and guess the example that it brought up: mortgage-backed securities.
To my point
GSE.
earlier in the show. Very interesting.
Exactly. Securities. Sorry, mortgage-backed securities, and then
Mhm.
CDOs, and then CDO squares, and this whole thing, and then that ended up being this house of cards that actually crumbled. How did it crumble? When the asset, the underlying, the mortgage going to be paid, the analog here would be if Bitcoin falls.
Right.
So I'm not seeing where the maths here, where Bitcoin does its normal 80% drawdown, and
Mhm.
MSTR walks through this perfectly fine. I just don't see this. I
Yeah.
just don't see it.
Yeah. Well, particularly since almost all of the value for MicroStrategy is now derived from their Bitcoin holdings rather than the actual underlying business.
That's
Yeah, I
right.
don't see how they hold that.
Let's take a moment to shout out TradersPost, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. TradersPost, because your strategy deserves to run at full speed.